We usually talk currency and rates, macro, but are we inoculated from this because of our own production?
I think that's clearly part of it. In the old days, if this happened, you would have thought there would have been a 5, 6, 7% move in oil, and it's a relatively muted move at this point in time. So really it's about the swing production. The swing production now sits in the U.S.
I mean, Alan, what is this 3% move? Yes, only takes us back, 36 hours on the price of oil. Tell us about how the market is positioning for risks around this region.
Yeah, I think at this point the market's just trying to guess at who is the perpetrator behind this. That's going to be crucial, really, in terms of the geopolitical impact. That being said, you see that global economy is slowing substantially. Demand is down quite significantly. You've got, as an example, global auto sales are down. Chinese auto sales are down. All roads lead to China, as it were. So it's that demand side that's still pulling oil down. I think that's quite helpful in keeping the shock effect on things like equities down for the time being.
Right, which leads us right to falling PMIs, cooling inflation, calls for a rate cut. Journal's got a headline as we speak. Economist survey, 3/4 say the next move will be a cut, compares to roughly half in May.
There better be a rate cut by July, in my opinion, or risk assets have some problems. Because the market is setting up to need that cut, and if it doesn't get it, it's going to be a pretty poor summer. So I really think the market is anticipating those 2 or 3 cuts, and I think you should be a little guarded at this point in time because the market is putting itself in a position for perfection. It needs 3 cuts to continue to go up, or at least maintain where it is at this point in time. You're priced to perfection in credit. So there's a lot of things out there that have to happen for us to continue to rally.
We keep hearing don't fight the Fed. I mean, estimate cuts have moderated. People say don't fight the Fed, but we haven't heard from the Fed yet, have we?
No, we haven't really. I mean, I think they're keeping their options open. I think they will keep their options open in June as well. We've got 5 beeps actually priced in terms of a cut, so I'd fade that one. But then it's going to be very dependent again on just how the tariff talks go, how the G20 goes. But if we see the ongoing tensions continuing, then I would tend to agree we're going to need a Fed rate cut in July.
I mean, the market needs it, but does the economy need it?
Look, global economy is clearly slowing down, and you're seeing it through all the numbers that are coming out. So I don't think it needs it right now. I think the market is forcing the Fed's hand at this point in time.
Sarah, I think you really got to look at what happens to the next non-farm payroll. We've had 1 week non-farm payroll number, right? If we have a half-decent number, next month, it's going to be all open again in terms of why should the Fed actually be cutting rates. So it's the China story and it's the economic data, really, and both are in swing and both in play.
But others would argue, I mean, Eurozone, industrial production, global PMIs have all predated the collapse of talks. So do you think the Fed is responding to tariffs and trade, or, I mean, are they already looking at a world that was slowing to begin with?
I think there are a lot of different things. So they obviously will take a holistic view. I think global economy is a crucial element of it, but that's been slowing the export side of the economy down for some time. The manufacturing sector is genuinely weak. The service sector is a question mark, I think. There are other signals, of course, things like the yield curve, money supply. There are a host of other things that are also pointing down. So I think it's a kind of feeling like, look, the economy is decelerating. It's a question of how much is it decelerating.
Shawn, I mean, you've been cautious overall on the markets. What have you made of this big bounce back that we saw after a brutal May for a very strong June, still tracking for the best month since January? Do you see conviction behind it?
It's very surprising, right? We're living in a world with volatility without volume. So you have price discrepancies that move aggressively because there's not that much volume in the marketplace. So the passive investing world has created this, and it creates more fluctuations in pricing. So I don't think there's a lot of conviction in my mind in this move, but it's a real move, right? You're talking 5%, so it's a big move for a month. So you've got to be at least cognizant of it. The question is what really happens to the economy, and global economy is slowing down, and that's been going on before the tariff news that was out there.
You said if the Fed doesn't signal a cut, equity markets got problems. Can you quantify the problem?
I think it's another 5 to 10% down, right? So you just have these massive fluctuations in pricing. And look, if we go back 18 months, where have we gone? Right? So we're kind of running on a treadmill. We're moving up and down in 5 and 10% increments, but they're really in very short spurts.
since we have you, Alan, you're a currency expert. I mean, the topic du jour right now is what happens if the dollar versus the Chinese yuan goes to 7. What does that level mean? What does an equity investor need to know about the significance of that level and what it could signal for the trade war?
So we've had the Chinese central bank governor say that 7's just a number. And he's right, in a sense, in terms of the medium term. But in the short term, if China just let the currency go through 7, I think it would be seen as a signal that China, to some extent, is giving up on the whole negotiations, is not looking too optimistically in terms of how trade negotiations are going forward. And that would be a pretty negative risk signal in and of itself, independent of the whole 7 level, really.
So really quick, my producer's going to kill me. Some argue to the Chinese 7 is not a magic number. You think it is?
I think it's very important, certainly in the short term.